So in part three, we focus only on the report, that what type of report we are expecting from the auditors. Now report. This is a very standard format of a report. The first thing is the title, the independent author's report on a complete set of general purposes financial statement addressed to the shareholders. Introductory paragraph in the opinion section. We have audited the accompanying financial statement of ABC company. That's a standard wordings we have to use in writing auditing report, which comprises the statement of financial position as at December 31st, 2000 X1, and the statement of comprehensive income statement of a change in equity and statement of cash flow for the year then ended, and notes to the financial statements, including a summary of the significant accounting policies. Opinion paragraph in the opinion section. In our opinion, the accompanying financial statement present fairly in all material respects or are given a true and a fair view of the financial position of the company as at December 31st, 2000X and of its financial performance and its cash flow for the year that ended in accordance with the International Financial Reporting Standards, IFRS. Basis for opinion. We conduct our audit in accordance with the International Standard on Accounting, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the company in accordance with the Provincial Ethics Standard Board for Accountants, Code of Ethics for Professional Accountants, together with the ethical requirements that are relevant to our audit of the financial statement in jurisdiction, and we have fulfilled our other ethical responsibilities in accordance with these requirements and the code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a base for our opinion. Key audit matters. Key audit matters are those matters that in our professional judgment were of a most significant in our audit of the financial statement of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Management and corporate governance responsibility. Responsibilities of management and those charged with the governance for the financial statement. The management is responsible for the preparation and fair presentation of the financial statement in accordance with IFRS, and for such internal control as the management determines is necessary to enable the preparation of a financial statements that are free from material misstatement, whether due to fraud or error. Management and corporate governance responsibility. In preparing the financial statement, management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable matter relate to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operation or has no realistic alternative but to do so. Those charged with governance are responsibility for overseeing the company's financial reporting process. Auditor's responsibilities and description of the audit. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, or to issue an auditor's report includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with CES will always detect a material misstatement. When it exists, misstatement can arise from fraud or error and are considered material if individually or in the aggregate they could reasonably be expected to influence the economic decisions of a user taken on the basis of these financial statements. Then the auditors have to sign, signature, place, date, and auditor's address. So this is a general standard report for generally accepted accounting principles. The auditor's opinion reflect accordance with the Canadian generally accepted accounting principles, can come from a variety of sources. The auditor's opinion implies Accounting principles used are generally accepted. Accounting principles used are appropriate. Statement and notes are informative. Classification and summarization is appropriate. Statements are accurate within materiality. Consistency. No reference to consistency is made in the unmodified audit report where no accounting changes have been made or when changes are properly disclosed. Adequate disclosure, that the disclosure made by the management in their accounts are appropriate. The audit opinion also implies that there is an adequate disclosure of all the important accounting information users need. Evaluating disclosure requirements, significant exercise of professional judgment. Lack of disclosure is a departure from GAAP and may require a modified audit report. Report contents. A report shall contain either an expression of opinion or an assertion that an opinion cannot be expressed. Opinion could be unmodified, modified, or adverse. A disclaimer of opinion is an auditor's declaration that no opinion is given. An explanation is required whether there is a report reservation. An assurance engagement, an engagement where the pursuant to an accountability relationship between two or more parties, a practitioner is engaged to issue a written communication expressing a conclusion concerning a subject matter for which the accountability party is responsible. Assertion, a statement about some aspect of a subject matter. Assurance standards can be applied to written and unwritten assertions. Unwritten direct reporting engagement, written attest engagement, audit and review are considered attest engagement. Now, audit, review, and direct reporting. So this is assurance engagement and non-assurance engagement for tax planning and for consultancy. Now, as we discussed, there is a three parties involved. One is the user, the other one is a accountable party, which is management, and the other one is a practitioner who is auditing the firm. So you see these arrows that practitioner is going to report the user and the management is responsible to the user. Quality control. Action taken to evaluate compliance with professional standard as defined in the CPA Canada Handbook and provide provincial rules of professional conduct. Several frameworks for quality control are available. And quality control frameworks have been developed by CPA Canada, the IFAC, and the AICPA. Quality control in audit firms has received considerable attention in the recent years. Elements of quality control, leadership responsibility for quality within the firm, relevant ethical requirements, acceptance and continuance of a client relationship, human resources, engagement performance, and monitoring. So these are the elements of a quality control. So this is all what we discuss about from the legal responsible framework under which the auditor has to not a legal, but the regulatory framework under which the auditor has to work in order to conduct an audit, and what will be the very standard structure of their report. That's the main idea of this chapter is. First thing is their responsibilities under different regulatory frameworks, and especially we discuss the regulations introduced in US after the 2002 crisis or bankruptcy of Enron or WorldCom. Then what we get it from those regulations as a provincial level, we introduce new regulations, and also we tighten up or enhance our regulatory bodies framework and effective monitoring. And in the last portion, we talk about the contents of the standard accounting auditing reports, whether it is modified or unmodified, or there's any qualification in the report or not. So that's all what I want to share with you from this chapter based on our book, what we are using in our course of auditing. So in my next videos, we're going to talk about chapter number 3 and 4. So see you. Bye bye.